Hey, it's Clay at claytrader.com, and we are talking bad logic when it comes to Bitcoin. Now, this logic applies to things outside of Bitcoin. Quite frankly, it'll apply to anything in life, but I want to keep us narrowed down in the trading sense. But if you found yourself thinking this way or allowing somebody else to influence you with this logic, I hope this video can open your eyes to the fact that, yeah, this really is just not good logic. There's very little quality behind it. So this comes from a comment I got on YouTube, and the person is saying, well, what happens when the Bitcoin whales make a conference call and sell off all at once? The purple line didn't help much, and I'll get to what the purple line here is being referred to in a moment. But the claim, the logic being used is this. It's a typical formula. Hey, what happens if, when, and then they just list some sort of like worst case scenario? Which, okay, it's true that that could happen. I mean, whether or not the odds are high or not, that's a whole nother discussion. But sure, the bad thing could happen. So to make sure we're on the same page, hey, Bitcoin is bad. Avoid Bitcoin because bad thing could happen in this situation. Bad thing is all the big whales, they get together, they do a conference call, and then they all decide to sell at once. So that is a bad thing. So yeah, why would you even bother with Bitcoin? Oh, okay. Well, that's true, but let's actually look at the data. Let's look at as straightforward of data as you can get. What data is that? Well, let's actually watch what's happened with Bitcoin, specifically since they brought it up in regards to the purple line here, which is just the 50-period simple moving average. So let's look at one of those bad situations where, a lot of selling pressure essentially shows up. And we have one of those here. You can see this big red candle. It came down, and yeah, I mean, to be fair to this person, that purple line did not mean much. The price just plunged right down through there. However, this is where the logic starts to fall apart, and is what makes it bad logic is because it's good in the sense of, well, that's true, it could happen. But it's the bad in the sense of it's discounting, it's not factoring in that we as traders, now I'm operating with the assumption you want to be a responsible trader, you're not looking to be a degenerate gambler, but if you're being a responsible trader, well, part of that is risk management. Part of risk management are using stop losses. So on those, well, what if XYZ bad event happens? Well, you're prepared for it and it doesn't crush you. So right here, yeah, and just to make the math easy, let's say somebody was looking to buy at that purple line, because yeah, that usually, and in many situations, that acts as support. But that didn't quite work out. So yeah, maybe that is stop loss. I don't know, right here, it came down, and right there, it's, I'll just put X for game over. Now, did they lose their account? No. Did they lose money? Yes. Was it annoying? Yes. But that's part of trading, is you're not going to always be right, because yeah, bad situations can happen. If those things happen, well, that's what stop losses are for. But my challenge back to this person is, okay, that's true. Those bad situations can happen, but the inverse is also true. I mean, good things can also happen. So let's just take a look down and see what else has happened in regards to that purple line. Again, the purple line you would think would act as support. And check this out right here, came down here, and people could have bought at that purple line, and it got a beautiful bounce. Now, I'm not saying that anybody played it perfectly, but let's just assume somebody played it. In fact, let's err on the side of caution. Let's say that they played it pretty bad. So that was the entire move, but they ended up selling, right up around here somewhere. So, well, where was their entry? Down here. So that box in this direction here represents the upwards move that they got. And in my situation, or in this person's, I should say, situation where, well, what if something really bad happens? Well, if they bought right there and they got out right here, well, that box is oh so small. In other words, it was a very minimal risk. Whereas if they play the same line, the purple line, and got the bounce, and even played it pretty poorly because they sold way too soon, that would have wiped away that really bad situation, that really bad event, plus some. So not only wiped it away, but put them into the green. And then let's go back to that purple line from another standpoint. So just basic technical analysis, when prices drop below areas that you would expect to act as support, you would then start to expect them to act as resistance. So right there, the price, as I talked about already, broke down through that area. So that's the really bad situation. Okay, well, let's, using our chart, using that purple line, these bad situations, you would expect it now to act as resistance. And what do you know? You can't make this stuff up. Price came back up here, and look at it, 2 candles in a row bounced off that area, meaning people that went short, and if you're a beginner, going short or shorting just means you would then want to see prices go down. And if prices go down, you would be making money. Well, those people did absolutely fantastic. Look at the size of that move. Again, let's just err on the side of caution, say they played it pretty poorly, and they got, right down there at those lows. Again, think about that box right there in regards to, well, that was the potential gain. And what was our risk when things didn't go well? Very, very minimal. And then as I talk right now, as Bitcoin is moving, check out what just happened very, very recently. Price bounced up, and well, wouldn't you know it, the purple line has shown back up and has knocked the price back down. Now, we don't know if it's going to get as bad as this one right here, but the fact of the matter is it's already knocked it down. And even that right there is a nice little opportunity to pull in some profits. So yes, people are right. Well, what happens if, or what happens when bad situation? Well, as traders, we're going to say, well, yeah, that's going to be annoying. That's going to be frustrating. We're going to lose money, but we're going to lose money wisely because I'm a disciplined trader. I'm a responsible trader. I am practicing risk management and risk control. A stop loss will be in place. So in other words, don't let that logic influence you to be scared to trade, whether that's trade Bitcoin or trade something else. That doesn't make any sense. It only makes sense if you don't plan on being a responsible trader, because yes, those nasty events can wipe you out. They can do a whole lot of damage to you if you're not respecting stop losses, using stop losses, and just at the core, managing risk. But if you are doing those things and you have a track record of doing those things, well, don't let other people scare you with that sort of logic. Just don't. It doesn't make any sense. So just be aware of that. And it happens, I don't want to say all the time, that'd be an exaggeration on my part, but in the YouTube, comment section, it's not shocking when somebody's like, well, what happens if? I like to call it the what if game. And anything can be made to look very stupid if you play the what if game. What if you cross the street, but then you slip on an acorn, you bump your head, and you knock yourself out, and then a semi runs you over? I mean, what if? At the core, I would argue, if you play the what if game, then you better just stay in bed, because the world is a dangerous place. And well, then again, what if you stay in bed and somehow you fall asleep, but the covers, because of a breeze, blows the covers up over your head, and then you suffocate to death? So, I mean, you got to be very careful with the what if game. It's bad logic, and, it can lead to just people being fair, people avoiding things that they shouldn't avoid in the world of trading, like I said. Now, if you want to present another reason why to avoid trading Bitcoin, hey, I'm open-minded. I'm all ears. But the logic used here, well, what happens if bad thing happens and creates a big old sell-off in Bitcoin? Okay, that's what a stop loss is for. So yes, don't let this logic or bad logic affect you with whatever you're trading, especially in Bitcoin, because yeah, it's not very convincing if you just stop and think about it and plan to be a disciplined trader. And on that note of being a disciplined trader, if you are interested in learning more about how to build consistency and manage risk, then definitely check out claytrader.com/live, or I'll put the link down in the description box, and that will give you an update on when my next live webinar will be. And I would encourage you to sign up for that because there's a lot of good stuff there, and it will help get your expectations in line with reality, what to expect, what would be a bad expectation, so on and so forth. So check out that link and learn about when the next live class is, and definitely get signed up for it. So I hope this helps. I hope this has opened your eyes to at least reconsider maybe some of the logic that you've been allowing to influence your decision-making process. Or if anything, just motivate you to, maybe be a little bit more disciplined within your trading. If there are any other questions or anything like that, please leave those down in the comment section. And if you enjoy the channel, if you enjoy these sorts of videos and you want to support the channel in a super easy, super free way, please hit that subscribe button. It really does help out. So thanks for watching. And yeah, let's avoid that bad logic.